Hi everyone, this is Linda Karressy from Inside Financial here with another tip to help your business grow. In corporate America, I used to wake up about 4 a.m. so I can be in the office by 5. As a financial analyst slash accountant, we always had to go through the month-end process. The month-end process is when you have to do bank reconciliations, you possibly may have to do physical inventory. You have to do journal entries, adjusting entries, a lot of accounting stuff. And it was very helpful for me to come in early. So by the time everyone else came in between 8 and 9, I was already done with my tasks. The month-end process in the annual month-end process actually was seamless for us because we had checklists and we had workflows. And most importantly, throughout the month, we were already working on month end. We would just verify information. If we saw any issues, we would clear those things up. As small businesses, we don't have that time. We don't have I shouldn't say we have a large accounting staff, but we usually don't even have accounting staff. So we have to spend our time catering to our customers, growing revenue. So today I want to share 3 tips on how to get ready for tax season. Number one, you want to make sure you have done your bank and credit card reconciliation. I know everyone loves to do this. It has to be done. The reconciliation ensures that your accounting records reflect truly what's going on. So if your bank has a certain amount of transactions, that information needs to be in your accounting system. If it's not in your accounting system, your financial reports are not accurate. They could actually be overvaluing things or undervaluing things, and you don't want that to happen. So make sure you have done the bank and credit card reconciliation. If you have not, you need to do that because if you have a CPA or someone else do it, they're going to charge you. So you're more familiar with the transactions, take some time, do the bank reconciliation. Another thing why bank reconciliation is important because you can also detect fraud. So when you're going through your bank statement, you can actually see, okay, I'm not sure what this transaction is about. I'm not sure why the bookkeeper did this. So this is where a lot of organizations are able to detect fraud. Recently, with my personal account, someone was charging us $44 a month. And I had called and they said, well, I had entered some sweepstakes to win an iPhone. And I entered our debit card information. And then it also entered me into signing up for some type of magazine subscription or something. And I'm like, I had no idea. So that's why it's important to do bank reconciliations because you can catch those type of things. Also, with your credit card, you still want to do a reconciliation because if you do not do a credit card reconciliation, your expenses could be understated and you don't want that to happen. So, very important to do a bank and credit card reconciliation. Number two, if you use the invoicing function in your accounting system, you need to pull your accounts receivable report and make sure it looks reasonable. Number one, there should be no credits. If there is a credit, that means that a payment was applied to the accounts receivable account and not applied to an invoice. So, accounts receivable is money that is owed to you. So, remember that money that is owed to you. So, there should be no credits. You want to make sure it looks reasonable. So, accounts receivable report, it lists all the customers that owe you and it tells how old that invoice is. So if you see invoices that are like over 200 days past due and you know that that customer has paid, that's a red flag. So you need to get that cleaned up before you submit your taxes. Number three, you also want to look at your accounts payable. Very important. This accounts payable is money that you owe someone else. So if you use the billing function for your accounting system, or you may have coded something incorrectly to accounts receivable, you want to make sure there's no credits, there's no large balances, and that you actually owe that money. Very important. Also, I thought of another one. Number 4, review your balance sheet. Your balance sheet tells you your assets, your liabilities, and your equity. So all of your transactions, all of them flow into the balance sheet. I'll have to make another video on how that all works. But so basically, the cash, the expenses, all of that good stuff rolls into the balance sheet. So if for your balance sheet, if you see large balances, if you see credit, if you see balances in accounts called uncategorized, you know you have to get those cleaned up. And if you need help, contact your bookkeeper or contact me and we can help you get those cleaned up. But these are just checks that you can do to help you save time, also to help you save money. So once again, if whoever does your taxes and if they have to help you clean this up, that's additional charge for you. So I challenge you to start putting systems and checklists in place. So when you get to tax season, you don't have to feel disgruntled or feel this stress because now you realize that, oh, I haven't reconciled in 6 months and now I have to figure out what's going on. So I suggest you put systems, checklists in place, put something on your calendar to remind you to start to get these things done. You want to focus on increasing sales. So a lot of times we talk about, well, we don't want to be so corporate, we want to be free, those type of things, but there are some good things that corporate America does. And one of the things is they have workflows, they have systems. So create a system for yourself so you can increase sales. I created, I'm sorry, not created, but I wrote a blog post. So check it out. I have some more tips on how to get ready for tax season. So hopefully tax season goes well for you, and I'm wishing you well. Thank you.